Ladies and gentlemen, it's your boy, Ryan Dins, and in today's episode, we're going to do a little analysis of Apple stock. Now, as you've seen from my past episodes, I absolutely love Apple stock. It is my #1 position I hold. But I did just sell a few because at the moment, I feel like it's just a little bit overbought. Apple, I believe it's eventually going to 200 within the next couple years, but I'm just going to hold out and maybe have it go back into the 130s until I buy it again. Right now it has a P ratio of about 28, which isn't too bad. A couple months ago it was a little bit higher, and it's got a dividend of about 0.6. It's nice to have that dividend, and they do continue to raise their dividends every single year. So it is a good stock, it is a good long-term hold, but I just think, and this is a caution to anyone watching this, I think that the market is a little bit overextended. The Buffett indicator is the highest it's ever been, and I just think you want to be on the side of caution right now. I'm going to hold a little bit of cash on the side. I'm hoping for a little bit of crash that I predict is going to happen soon, within the next year or two definitely, but it may happen sooner, so I just don't want to have all my money in stocks. I am not selling stocks that have high dividends because then I could collect the high dividend payments, but when you have a stock like Apple, it's better to just know when it's going to crash and then buy it at the bottom. It's obviously not great to time it. I should have sold like a couple weeks ago, but I didn't sell a lot. With that being said, I sold about 15% of my position just to hedge a little bit and have a little bit of cash on the side. I do feel a little bit the same about Microsoft. Microsoft is also overextended, and the way that I look at it, if I'm going to be holding any stocks right now, I don't want them to be the stocks that are the most overbought. And the most overbought stocks that I personally own are Apple and Microsoft right now. Pfizer was overbought, but it took a little bit of dip. That's pretty much all I can say about this. Just do your research and make sure you do not buy these stocks at the top. The last thing you would want to do is take your life savings and throw it into Apple or Microsoft right now at this exact moment. If you're going to do it, cost average, buy a little bit each month, and that is probably the best strategy if you're a long-term investor. So don't take any risks, and especially if you want to take one piece of knowledge from this, don't be buying those risky stocks right now. It is too much of a risk. I see these people with their hyped up Reddit stocks. You want to do something like that right after a crash when the risk is low. Right now the risk is a little bit high, so you really need to know what you're doing. You know, have a little bit of cash to the side just in case we do have a crash, because if we do have a crash, the S&P is going to fall to about 300. There's a very clear trend line there. There's strong support there, so that could be about 30%. So it might not happen. It might only dip a little bit, but it's pretty overbought. Like I said before, the Buffett indicator is the highest it's ever been. So you don't want to be taking unnecessary risks, and you should leave a little bit of cash on the sideline. With that being said, I'm going to leave Apple as a hold. I don't think you should buy it right now. I don't think you should sell it right now. Right there at a hold. That's what I'm going to call it as. So have a great day. Enjoy your day. Woo!